we're going to talk about EIF's 15 billion euro fund of funds. The title that I've given this, just to tee it up, gents, is Europe finally writes a big check, but is it the right check? Now, we all know there's a funding gap in Europe. We need this here. By some measures, we're about $75 billion off the US by quantum, although I'm not sure where that number really comes from or even why we're comparing. The EIF is launching this $15 billion fund of funds to back 100 growth stage VCs, and it's looking for mid-size, the 300 to 600 mil, and some mega funds, the 1 bill plus. And they're looking for a first close this summer. I've read it's going to be probably Q3, which to me means that they don't have all the LPs signed. So maybe there's some pensions and institutions that aren't in the pot just yet. They are looking to use this 15 bill to unlock 80 bill in scale-up funding, which obviously we desperately need. Now, the way that I'm reading this is simply the EU's push for sovereignty and therefore defense, which I think is fair enough. Will it drive? So here's the questions that I want to kind of throw into the room. Is this going to diversify the ecosystem or just entrench the incumbents that they've been serving? Does that even matter? Thinking more geopolitically, and we're going to talk a bit more about these topics later, China's strategy is open source, and they're now looking to sell tokens and create a token economy. The US obviously has the foundationals, the RIAs, the big mega funds. Europe, I've put in the bracket of we should double down on the application layer. So this new EIF fund of funds model, could it work? Is it a good idea? Do we need more? Where are the pitfalls? Lomax, set more of the scene for us.
Well, let's put this in context here. So there is no doubt in my mind, and I think probably you guys would agree, that the quality of founders and talent in tech companies is never been better in Europe than it is today. We don't lack that. We talked about academic institutions.
I don't think we've ever lacked that. My take is they just haven't been as in the forefront. The boys and girls have always been here. We've always had, from the numbers, more R&D, more scientists, more founders than the US. They just haven't had the showcase. So my take is they're starting to come through. And as we spoke about last week, 25% of the unicorns last year were European. So it feels like they were here. They just weren't front of house.
I think historically we've had a bit of a mindset problem. It's just that, the best graduates have gone to, what someone once called the Bermuda Triangle of, law, accountancy and consultancy.
Fair. Yeah.
And that's slowly starting to shift. I mean, clearly that's also happens in the US, but I think the US has certainly a more entrepreneurial mindset where going into an entrepreneurial profession, rather than selling your own business, is more celebrated in society. And I think that slowly is changing here. But the major constraint we've had is capital, right? So, to put it in context, the EU and the UK venture raised roughly $60 billion in 2025. Then, the number in the US was $340 billion. The OpenAI raised a round of $40 billion at the beginning of last year. I think their next round is mooted to be 60 to 100 billion.
Well, they just did a little mini top up of 10 bill, just a cool drop 10 bill, right?
Raised 30, and Anduril's about to raise 60. And that's just the whole market last year in Europe. So the big problem is capital, and this is a great thing. This is the other bit of context is Europe lacks capital at the sort of growth stage. We have actually a lot of pre-seed and seed capital now in Europe, but there's 5 times the number of rounds of between 20 and 100 million US than there is in Europe. So what the EIF here, the European Investment Fund, is saying is we are now creating a big fund of funds to try and focus on the growth funds that can write these bigger checks. So I think that is undoubtedly a really good thing. The other context still is that to plug the capital gap, we still rely a lot on government money in European venture. It's still something like 40% of the capital raised by European venture funds, including the UK, comes from the big 5, EIF, British Business Bank, BPI in France, IFO in Denmark, and KfW in Germany.
But you mustn't dismiss the American subsidies. I mean, the American government has subsidized private and public markets for decades.
Well,
that's what their deficit is. I mean, if you just...
Yes, I don't disagree with that. But the same thing happens in Europe as well, right, to a certain extent. But when you when you look at this in this particular like direct capital intervention, Europe is much more underpinned by government money than it is in the US because
I think there is a problem there. I think sometimes it's great that they do it, but sometimes the inflexibility they put on venture funds, you do get this kind of monolithic business model because they say this is how big your venture fund should be, this is how you should deploy it. And the one thing I think Europe does lack as well is that there's less diversity within these different bands of VC funds, and that's because it's almost like it's a grant competition to raise a fund in Europe sometimes. So it'd be great to see more flexibility in these things. It
has flexed, Harry. I'm on the inside with some of the European outfits and the BBB quite heavily, and the whole Trump, Russia, Ukraine, Gaza, Israel, and the whole onshoring, reshoring, friendshoring, defense resilience push has really made them change their minds on lots of things.
Yeah, I mean, I'm hearing it, with BBB, but I'm not seeing it at the moment. I've seen it in the top line strategy. I mean, I think the big problem is, you've said it, there's amazing founders, amazing research, but actually pre-seed and seed funds are far too small. And at the end of the day, your fund size is your strategy. And if you look at Europe, you've got, so many sub 50 million funds, and there's hardly any 250. And then you get these mega funds. So actually, I think the big problem we have is that typically, US founders are raising, almost Series A level of capital up to seed. They're getting this kind of 10, 20 million seed. And then effectively, what you then have is sort of multiple rounds of dilution, and you get into this issue of messed up cap tables. And then you've got this problem that, US funds don't want to come into some of these deals. So what's great to see here is there is this kind of mention that it's not like the previous one going to these kind of mega billion plus funds. There is this kind of 300 to 600. What I hope for those funds is be a 300 million seed fund. Why not fund things properly from day one?
But the argument was always, wasn't it, Harry, that there weren't enough startups to fund. So your thesis is there are now enough businesses to fund.
I don't know. I think there's definitely enough businesses. I think they're just, in the UK, it's terrible. But outside the Golden Triangle, these kind of size of these average pre-seed seed funds falls off a cliff. It's like hundreds of thousands.
Yeah.
So it's a massive problem. But we need to, the companies are there, but if you funded them poorly, the company is then continually fundraising. It can't bring in the talent, and it can't achieve kind of the technical progress in the US counterpart. So the science has always been there. I think we've just chronically underfunded at the early stage.
That's actually a really good point, Harry. And one thing, it reminds me of this notion that the goalpost keeps moving, right? And so we actually, at one point, we did have a major problem with pre-seed and seed in Europe. Then we actually largely fixed that, because a lot of the big five that I just talked about have, outside of this major program that we just talked about, have put a lot of money into anchoring seed funds, right? The $50 to $60 million seed funds. And that actually meant there was quite a lot of good capital for the 1 to 3 mil seed rounds, right? Pre-seed and seed rounds. Then we talked about this problem, later stage capital, which they're now trying to fix. They've now got to put a finger in another hole, which is basically that the market has moved such that good companies don't want or need a 3 mil to compete globally. A 3 mil seed round doesn't cut it anymore.
No.
They now need to raise 10 mil seed round, which means you need to go, you fix the seed round.
ECF has a 5 million max round size still. I mean, I've said this before.
Still.
Hopefully they're going to waiver it. But, so you say, company wants to raise a 5 million plus pre-seed seed round, whatever you want to call it, right? Their first round.
I don't even know what these names mean anymore.
But you go look at the best companies, they're raising easy 10, 20 million on some of them are raising 1 billion seeds.
Well,
we're orders of magnitude sometimes away from where it should, and especially the pendulum swing into physical AI to deep tech. There's early technical risk that needs to be hit on top of just your MVP and showing product market fit. So here it's especially important that we capitalize things properly from day one. The other thing that happens if you undercapitalize early founders, they get into bad habits, they get bad advice, they can't quite get the talent. So these problems compound and they elongate the journey and just add risk. So I think you're actually better off funding this
So
properly.
Harry, is your thesis that whole kind of being constrained by capital because of AI, because of defense and resilience and the new quantums that we're talking about, we just need to, I guess I'm answering my own question, we just need to think very differently about the pot of time and the facility that the money is going to enable for these founders, and just maybe double everything, I guess.
We just need to look across the stack, right? If you've got multi-billion huge growth funds, you've just got to think that you've got to put more money in at the start, more money at the middle, more money at the end, and I think you'll get higher quality out the other end. The problem is all of a sudden you've got too many big funds. You're still in this situation where you've had underfunded companies at seed. And then you're going, well, hang on a minute. If I go compare a Series A in the US and compared to Europe, they've done a lot. Of course, they've done a lot less. They've had a quarter of the capital. So you've got to. I constantly hear that there's no problem at pre-seed and seed. There is, absolutely is, and that's because our funds are far too small. Which means if you've got a 50 million fund, which is probably a big seed fund in Europe, you cut that up 20 ways, maybe 30 ways. You do, half on an initial check, reserve half for follow on. All of a sudden you've got these party syndicated rounds. Syndicated rounds just means it's just a headache for founders because
we can't compare. I mean, you can't. If you look at the RIAs and the big mega funds in the States, I mean, there's just two different strands of venture, and they're not even VC. So it's hard when you're having a venture capital bucket conversation when really there's maybe 2 or 3 different models that we're aggregating together. So I don't know where the lines are. I do believe, though, to my last point in my tee up, that Europe doubling down on growth for the application layer. Let's worry about America doing all the foundational models and all the big ticket stuff, if you like. China, we're going to talk about later, which is their new AI token economy. I don't know if it's going to take off or not, but I think it's a really interesting model that they can apply that other markets can't. Maybe Europe should do what it does and just focus in on defense, resilience, sovereign, but the application layer of AI rather than worrying about what is demanding mega massive tickets. I don't know. That's my thesis.
I would agree that we shouldn't be going after like mega foundation models and things. I mean, we can't compete on cost of electricity. But in terms of like the hard tech, the deep tech, which is the physical, picks and shovels of this stuff, the collecting of the data, that still needs, advanced manufacturing. You still need deep pockets. And that's why I think, and what's good to see with this EIF money is it is focused towards these areas. It's not just building mega bio AI foundational models and data centers. It is going into that kind of like hard tech, deep tech space. And that does need decent amounts of capital. Not these kind of £1 billion seed rounds because you're building a foundation model. And I think we should be more on the picks and shovels and the applications. I completely agree.
Yeah. Lomax, sorry, we very rudely interrupted you to all of that.
No, nothing. I mean, I think it's funny. Harry's raised a really interesting point. Like I keep going on about, and here I was making the point that we do have a massive gap at the growth stage, particularly in deep tech companies, where they really should be raising to be globally competitive from 100 to 200 million at Series B, Series C, and especially if they're deep tech, where the metrics that you use are different to an application layer company. They can be very, very difficult to get the big checks that in the US, people like Founders Fund, 8VC are very, very happy to write. I think it's good.
But don't you think the sovereign side is gonna soften that a bit? And what I mean is
what I'm saying. This is no. I'm saying that, like, if you look at the text on this EIF $15 billion euro fund of fund when it's eventually raised, because as you say, it's only been committed on 1.5 so far, is they want to be backing funds that actually cut 200 million euro checks into a single round, right? So that does mean it's not going to fix the problem that Harry just articulated well, which is that actually, unlike what I was saying, we do have a problem at pre-seed and seed, which is we're not getting round big enough, and that is a very good point. But at least it's starting to fix this kind of later stage problem where actually deep tech companies that want to go, and I have a number in my portfolio that should really be trying to raise between 50 and between 100 and 200 now, but they can actually only get 30 to 50. I think that's something that we really, really need for these companies. Otherwise, they're either going to get acquired or they're going to be moving too slowly. They won't have the velocity that they need to hire.
But it will displace some of the American capital on it. I think that's part of their point, is that if we can fill the gap and retain ownership for longer, then obviously some of that value stays in Europe.